Most people have heard of refinancing a mortgage. Very few people have heard of something called mortgage recasting. And because it's less common, it's also widely misunderstood. So let's break it down clearly. Mortgage recasting is when you make a large lump sum payment toward your existing mortgage principal and then ask your lender to recalculate your monthly payment based on the new, lower balance while keeping your original interest rate and loan term intact. That's the key distinction. You are not taking out a new loan. You are not changing your interest rate. You are not resetting your 30-year clock. You are simply reducing the balance dramatically and asking the bank to re-amortize what's left. Here's a simple example. Let's say you have a $400,000 mortgage at a 6% interest rate over 30 years. 5 years into the loan, you receive an inheritance or sell another property and decide to put $100,000 toward the principal. If you just make that extra payment without recasting, your loan balance drops and you'll pay it off sooner, but your required monthly payment stays the same. If instead you request a recast after making that $100,000 payment, the lender recalculates your monthly payment over the remaining term based on the new, lower principal. Your payment could drop significantly even though your interest rate doesn't change. So what's the benefit? The main benefit is lower required monthly payments without refinancing. There are no new closing costs like a refinance would have, and there's usually only a small administrative fee, often a few $100s. It can improve monthly cash flow while still preserving your original loan terms. Now, let's clarify what mortgage recasting is not. It is not refinancing. When you refinance, you replace your existing mortgage with a brand new loan. That can change your interest rate, your term length, and your closing costs. Recasting keeps your original loan. It just recalculates it. It is also not universally available. Not all loan types allow recasting. Most conventional loans backed by Fannie Mae or Freddie Mac allow it, but FHA loans, VA loans, and USDA loans often do not. You typically must be current on payments, and lenders usually require a minimum lump sum principal payment, often around $5,000 to $10,000 or more. There's also a strategic question involved. Recasting lowers your required payment, but it does not change your interest rate. If interest rates have dropped significantly since you took out your mortgage, refinancing might save more money long term. On the other hand, if you locked in a very low rate years ago and rates are now higher, recasting lets you keep that low rate while still improving your cash flow. For some homeowners, recasting is especially useful after selling one home and buying another. They might buy the new home first with a smaller down payment, then apply the proceeds from their old home sale toward the new mortgage and recast to reduce payments. Now, let's talk about the trade-off. When you put a large lump sum into your mortgage, that money becomes a liquid. It's locked into your home equity. You can't easily access it again without selling or borrowing against the house. So, before recasting, you want to make sure your emergency fund is solid and that you're not sacrificing flexibility. In simple terms, mortgage recasting is a middle ground. It's less dramatic than refinancing. It's less aggressive than paying off your mortgage early. It's a way to use a large lump sum to permanently reduce your monthly payment without changing your loan structure. And because it's not heavily advertised by lenders, many homeowners don't even realize it's an option. If you own a home and plan to make a large principal payment, it's worth asking your lender one simple question. Do you allow mortgage recasting? That one question could meaningfully change your monthly budget.